AIG exiting Ugandan market does not mean that they are forfeiting the obligations. The obligations remain. And the people who are holding policies with them will still remain insured up to the expiry of those policies. Now, there are two options. Number one is that AIG will be running on what we call run-off basis. Now, come 31st March 2021, they will not be writing new policies. But the ones which are already on will be running until they expire. That is one option. They may even opt to sell off the businesses to some other existing company. But the information we have now is that they will operate on a run-off basis. The beauty is that we still hold their security deposit. They cannot take it away until such a point when all the outstanding obligations have been settled in Uganda. The policies have matured, have expired, the claims which are due have been paid, and if there is any complaint which has been registered with us, that complaint has been resolved. At that point in time, when we assess and discover that all the outstanding obligations have been dealt with, then we shall clear AIG. Generally speaking, it does not pose serious challenges to the existing market. Now, we have 20 now. When AIG leaves, we shall remain with 20 non-life insurance companies. That's already a big market. And amongst the 20 would be worried of that competition is reducing, with reducing numbers, but still 20 is a significant market with very vast options for the insureds and those intending to insure. So the options are still very wide. If we had 3 companies, we would get worried that 2 probably could move towards monopoly. But when you are moving from 21 to 20, we still feel the market is big, the competition is still stiff, and stiff competition, of course, to a policyholder is good because it means efficiency. It means more value for money because companies now will have to compete to deliver value to survive in this competitive environment. So I would say not so much, and we are certain that other players will continue coming. Actually, that's why I'm saying that we may not ask so much why AIG, because we already have applications for new players. So if the market was bad, probably would not expect other players to be coming into Uganda. Now, to the clients of AIG, number one, it is unfortunate that AIG is leaving. Probably some people have a long-term relationship with AIG. They have memory, they have cultivated that relationship. Now, that is very unfortunate. And we cannot reverse that. As a regulator, we do not have power to say, don't go. That's a business decision. Now, good news is, these policies are short-term. AIG is a non-life company. Most of their policies mature in 1 year or less. These policies are going to expire. If a policy was issued this month, maybe come January 2022, it will be expiring. Now, for those policies which are running, AIG will continue servicing them. We are going to monitor. AIG is exiting, but going to operate on what I have called a run-off basis. So that is the good news. Number 2, the other good news is that AIG has left, but there are 20 other companies from which they can source their new policies. So my advice is that let them accept AIG has gone or is going. They are safe in terms of insurance because they remain insured by AIG until their policies expire. And number 3, when those policies expire, let them look around for any other company. We have very, very strong companies on this market. They can look for another option. They can actually start engaging in discussions now with other potential insurers so that by the time their policies are expiring, then they already have identified a potential insurer.